is coming from the tech sector, and you can see that reflected in the NASDAQ 100, now building on its gains, up about 1% right now. You think about what's doing well in this market. You have NVIDIA shares higher by about 3%, Tesla higher by 3.5% as well, Broadcom and Apple and Amazon and Microsoft also adding to the party, and you add it all together, the NASDAQ 100 currently up about 1%. Pretty quiet on the bond market front. I'm talking relatively, though, because we are seeing a little bit of a sell-off. The two-year Treasury yield higher by about 2 basis points. The 10-year Treasury yield higher by about 3 basis points. We did get better than expected JOLTS data this morning. It'll be really interesting to see what we get on Friday's NFP report. I'm Katie Greifeld. That does it for Bloomberg Markets. Balance of Power is up next. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The House holds its breath as the Senate takes up the big bill. Welcome to the Tuesday edition as President Trump digs into negotiations with senators now who could make major changes to the legislation. And then what? Alongside Kaylee Lyons, I'm Joe Matthew in Washington. Thanks for being with us on the fastest show in politics. Kaylee, the president met with about a half dozen senators yesterday, all of whom have their own concerns.
Yes, indeed. One of the loudest, perhaps, being Rand Paul, the senator who does not want a debt ceiling increase included in this legislation. He spoke with President Trump yesterday, and President Trump had some words for him publicly this morning on True Social. Rand votes no on everything. His ideas are actually crazy, he says.
I guess they didn't have a good call because they were on the phone yesterday. Several of these meetings were in person, including John Thune, who, boy, he's got a lot to balance right now as this bill makes its way through the Senate. We're going to be talking about this coming up with someone who's been there, Bill Hoagland from the Bipartisan Policy Center. a veteran of the Senate and knows about times like these.
Well, certainly also knows about the rules of the Senate, including the parliamentarian, because it's not just about what senators want to change that's in the bill. It's also what can pass muster when all of this is supposed to be a matter of budget reconciliation. And the parliament may decide some of the things the House put in there don't fit that bill.
The bird bath might bring some changes. We'll also get an update from the White House. Bloomberg's Tyler Kendall is standing by on the North Lawn as the phone continues to ring in the Oval Office.
Indeed. But first, we go instead to New York at our global headquarters, where we find Charlie Pellet, as always, keeping an eye on the markets for us as we kick things off. Hey, Charlie.
Well, hello there. Indeed, a familiar theme. Just about every update I've been telling you we're at the high of the session. That is the truth right now, with the Dow Jones Industrial Average up 193, up by about 0.5%. We've got the S&P up 39 now, up by about 0.7%. NASDAQ up almost 200 points, up 197, higher by 1%. The Bloomberg Mag 7 Index also higher now by 1%. Stocks are gaining as U.S. jobs hold up amid the trade war. The 10-year, 4.46%. The 2-year right now at 3.96%. Gold now slumping 1%, 33.49 the ounce. And West Texas Intermediate crude up 1.8%, 63.65 a barrel on WTI. Bitcoin just below $106,000. Bitcoin right now higher by 1%. Constellation Energy has agreed to sell power from an Illinois nuclear plant to Meta Platforms as artificial intelligence sends power demand soaring. Shares of Meta, they're slumping now by 0.1%. Constellation, though, up by 1.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. In fact, we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. Here in Washington, we have our eyes on Capitol Hill, specifically on the Senate, after we spent weeks watching the House of Representatives and the wrangling that it took to get the House Republican Conference in line to pass President Trump's One Big Beautiful Bill, as it is actually, this legislation is actually now called the One Big Beautiful Bill Act. Remember, it took a lot of wrestling, arm wrestling from the Speaker of the House, Mike Johnson, but also from President Trump himself. In some ways, arguably, Joe, it's President Trump that's acting as the majority whip. I don't know where Tom Emmer is in any of this, but the question is going to be, can President Trump play that role as well in the United States Senate, where the dynamics are a little bit different, though certainly we see evidence today of the president trying.
Dynamics are really different, as John Thune would tell you, beginning with SALT. You don't have senators, Republican senators, in SALT states, which is the beginning of just a long list of different ideas that are going to be coming out of the upper chamber. Whether they make them into legislation has yet to be seen. Tyler Kendall is standing by at the White House for us right now. Bloomberg Washington correspondent, with her eye on the administration's take on this, because, Tyler, that does seem to be the energy center is on President Trump's end of Pennsylvania Avenue right now, right?
Yeah, hey, Joe. President Trump really trying to ramp up the pressure on these Senate Republicans, making phone calls, posting on Truth Social, as you've been mentioning, because we have to keep in mind here, the White House is dealing with some pretty conflicting demands when it comes to these Republicans that want to make changes to the House bill. On one hand, you have this group of senators pitching themselves as fiscal hawks. Rand Paul, you mentioned, also Senator Ron Johnson, who had a phone call with President Trump yesterday, says he has plans to meet with the White House's economic team, and he wants to see some deeper spending cuts. But of course, on the other hand here, we have those concerns from Republicans about what changes to benefit programs could ultimately mean, particularly when it comes to Medicaid, perhaps speeding up those work requirements. Also, the House's plan to freeze the Medicaid provider tax, have some of the states take on more of that cost sharing. These are all raising concerns and really is a politically fraught issue for this White House. President Trump doubling down in recent posts on Truth Social, saying that the bill will not cut Medicaid, but there are analysis out there, including one that we cite here at Bloomberg News, that predicts 7.7 million people by 2034 could ultimately lose coverage because of a shifting in the eligibility requirements. So they really are going to have to thread the needle here to make everybody happy and ultimately to pass this bill. I could keep going. Of course, it's the big, beautiful bill, so there's a lot of other provisions where we're seeing disagreements. But Joe and Kaylee, we have to keep in mind, they can only lose 3 Republicans at the end of the day, and we know there are many more than that are raising concerns.
Yeah, Rand Paul says he thinks there are at least 4 who could be ready to stop this thing in its tracks, knowing that the White House is up against a kind of self-imposed deadline, if you will, that Senator Thune, Tyler, seems to be going along with. They want this done by July 4th. When would that mean it actually leaves the Senate if it still has to go back to the House, if it's to get to the president's desk by Independence Day?
Right, exactly, Kaylee. It's definitely an expedited timeline. Senator Tom Tillis, a Republican from North Carolina, did tell reporters yesterday that the Senate's current plan, their goal, is to get some of those Medicaid and tax changes over to the White House to review by this weekend, and then to push more of a fuller draft of the package in the next 10 to 15 days. This would be incredibly expedited. Now, of course, they want to see this done by July 4th because that ultimately gives lawmakers a little bit of buffer room here against what really is going to be that hard deadline, which of course is the X date. We even had Treasury Secretary Scott Bessent really say that that is going to be what adds fuel to the fire for these lawmakers, because it is one big beautiful bill. So they are of course also attaching a hike to the debt ceiling. And we were talking about Senator Rand Paul before. His biggest point of opposition is that this bill ends up lifting that ceiling. But when you look at the details of this, the House plan lifts it by $4 trillion, Joe and Kaylee, but the Senate has said there's enough runway to lift it up to by $5 trillion. So there's still disagreement even among that issue, too.
All right, Bloomberg's Tyler Kendall live on the North Lawn of the White House. Thank you so much. As we consider the positions of various senators here, Senator Cynthia Lummis, the Republican from Wyoming, was on Bloomberg TV and radio in the last hour saying that there are changes she needs to see on Medicaid, specifically if she's to vote yes for this bill. And we had a similar conversation with one of her colleagues, Senator Kevin Cramer of North Dakota, joined us on the late edition of Balance of Power yesterday. And we asked him if he'd be prepared to vote yes as it stands right now. This is what he told us.
I want this to pass, but there's no reason that the Senate should just simply rubber stamp it when we can do so much better. I think it was interesting listening to the leader from the House say they don't think there's any way to find more savings, and I think that's really the thing we have to do. We will not be able to pass the bill without finding some more spending cuts. I do think, though, by and large, it will look similar to the House bill, but we just may be able to find some other places for savings.
So for more on where exactly they might be able to find savings, just how big these changes to the numbers might be, we turn to Bill Hoagland, Senior Vice President at the Bipartisan Policy Center and former Republican Staff Director for the Senate Budget Committee, who was here with us in our Washington, D.C. studio. Bill, welcome back to Bloomberg TV and radio. Always good to have you. When you look at what you're hearing from the various factions in the Senate, those who want steeper cuts, those who think the cuts maybe go too far, who would you anticipate wins out here? Or do they actually cancel each other out and we're not going to see many changes at all?
No, I think there'll be changes in the bill, and I think it is likely that they will come together. There's a lot of pressure being put on, particularly as it relates to if they do not put something together here, the tax increases that will take place will hit 68% of all those out there who file taxes, one way or the other, how much that is. But certainly there will be pressure. Changes will take place. They'll have to take place. There's no question in my mind that there are a number of provisions in this bill that the House sent over that are what we call birdable, in the sense that they do not belong in this bill. They have no budgetary consequence. And so it will change. Now, the question I would ask, though, is to get it done and on the president's desk by July the 4th. Is a rather expedited process, but what that tells me is that the Senate will have to negotiate what they pass. The House will have to just simply take up and pass, and that's where the difficulty is going to lie in terms of can they put a bill together in the Senate that the House can simply take and pass.
Should we assume that the current policy baseline accounting method is okay with the parliamentarian? Will that be the case in the Senate?
Well, Joe, that's a very good question. It's a question that I've been asking myself for quite some time.
Mike Johnson seems to be making this assumption.
I think that being an old budgeteer, I don't think that it passes the test that is necessary to get around a bird rule. There is a problem here with the current policy baseline, and I don't want to get into the weeds here, but it does impact upon what we call the bird rule, which is adding to the deficit beyond the 10-year window, in which case then it would be it would violate the process. And historically, I've been out of the 24 reconciliation bills that have been enacted over the 50-year history of the the Budget Act. I participated in about 20 of them, I guess, and we've always used current law, not current policy. But at the same time, I will tell you what I'm picking up, and as an old budgeteer who thinks deficits and debt matter, I'm picking up it doesn't really matter right now. They aren't concerned about the debt and deficit, and that's disconcerting to me, if nothing else.
Well, we've also heard from the majority leader, Senator Thune contends that actually it's up to Senator Lindsey Graham, who leads the Budget Committee, to decide whether current policy baseline is justified or not. Do you see John Thune as being willing to defy the parliamentarian on that or any issue?
No, I don't. I think the majority leader has, I understood, made it very clear he's not going to question the parliamentarian. And therefore, I don't think he would go beyond the parliamentarian's advice. Now, again, the parliamentarian gives the advice to the chair. The chair rules, not the parliamentarian. And so it's possible the chair could say current policy is fine and we'll go forward with it. It's an unanswerable question, Joe. I'm sorry at this point to give you that answer.
Well, this is, we're getting to the rub here. I mean,
yes.
The old line that the Senate is the saucer that cools the tea. Is it going to be the opposite this time?
I think the Senate is going to certainly modify the House, the hot tea of the House, and
turn up the heat under the tea.
But honestly, this is going to be a very dicey exercise, obviously, for the majority leader in the Senate, because he has to also make sure that whatever he passes can get passed back into the House and not fail in the House, too. So getting the two sides, the ones who want more deficit reduction and those who don't want to make the particular reductions that are necessary, this is going to be a very, very difficult exercise for the new majority leader.
When we consider the Medicaid issue specifically, President Trump is contending that there are false statements being made, that these are not Medicaid cuts that are happening. We've been told the same by many Republicans on this program, including Congresswoman Ashley Hinson last night, who told us that this is just fear-mongering on the Democrats. This isn't about cuts. It's about making sure the program can last long term. How realistically should we be framing these Medicaid alterations, cuts, whatever you want to call them?
I think it's half. I think there's truth in both arguments that are being put forth. Number one, work requirements. Are the work requirements a cut? No, if they're requiring individuals to participate in the Medicaid program, and if they choose not to because of the work requirement, is that a cut? I don't know. At the same time, the provider tax that's in there does impact directly, I think, nursing homes, rural hospitals. That could feed back to being real cuts on individuals. So when the CBO makes the estimate, and your reporter indicated also about 6.7 million, 7 million people that would be removed from the Medicaid rolls because of this, I think it's hard to say there aren't going to be reductions here. And particularly the one area that should be focused on, I think, as coming from a rural area myself, is the rural hospitals. They could very well be hit by the provider tax. One other thing I want to make, Kaylee, that point I would make is that we should also look at the SNAP program, the food stamp program, and the changes that are being proposed there, which are work requirements also, but also the requirement that the states pick up a particular share. Right now, the SNAP benefit itself is 100% federal. If you're asking the states to pick that up for the SNAP benefits, and then you're asking the states to pick up the administrative cost associated with the work requirement, there are going to be some major shifts in administrative costs to the states. And those are, a lot of them are red states. And so when those red state governors start calling their senator, I think it will make some changes.
Well, you're really putting your finger on. So Jim Justice knows this, which is why he's been talking about it. Republican senators with big rural communities in their states are deeply concerned about that provider tax. They see nursing homes closing, rural hospitals closing. Does that mean Republicans crank back the changes to Medicaid? I
think there will be some changes in the Medicaid program, particularly coming out of there. You've reported so many times here. We got Susan Collins, who has concerns. You have Murkowski has concerns.
That's right.
Josh Hawley, of all people, a conservative senator, has concerns about that. These are big issues in rural areas of the country and rural hospitals. Yes, I think there will be changes.
Well, as we wait to see what those changes are in the Senate, the House is also going to be taking up some work this week, as the White House is now formally sharing a precision package with the House. PBS, NPR, USAID funding, I think it amounts to about $9 billion.
$9 billion.
Bill, I think they're going to make a big deal out of this. But is this a big deal, or is it a drop in a bucket?
Well, $9 billion is nothing to snuff at. And I would say that, yes, it is a big deal. The question here is, I'm not clear. I haven't seen the proposal yet, whether it's the $9 billion is made up of basically the USAID funds and then the public radio and public communication. And my sense here is if they put those two together as one package, it probably does pass the House. I'm not sure it passes the Senate, though. Again, we're back to the rural areas that depend a lot upon some of the corporate broadcasting systems that are out there. Not to take anything away from Bloomberg at all, of course, but
Sure.
definitely.
Yeah.
So, yes, that's it. One thing you should know is that that this is probably just the start of rescission. This is something under the Impoundment Control Act. The president has every right to propose to Congress the elimination of funding that has been made available. My sense is there's going to be a lot more coming later in the year.
Yeah? Will that be coming with help from the Doge, or is that a separate?
Well, it's separate from Doge, but the Doge proposals that now take actual form in the form of a rescission that would be submitted to Congress. I don't want to get into the weeds too far here, but you have 45. Congress has 45 days to act on a rescission package once it's submitted. Either you approve it or you don't approve it. And if you wait until, say, the middle of the August recess and you propose those, it is possible that those rescissions would go in effect without any action by Congress. This is what we call line item rescission veto. Yeah. And so be aware that there's some more coming.
And that can happen during a recess, is what you're saying?
It can. It's not. They're not on official recess. Okay. There's continuous session. They will not go on recess during the August
so you keep one
vacation.
Pro
forma
the pro forma largely so that they can avoid recess appointments.
Right. Wow. We have
Remember when we were having a conversation about recess appointments every day?
Yes, we were.
On the cabinet nominees.
Just wait, it'll come back around. We'll call Bill Hoagland. It's great to have you with us.
Thank you.
Bill, as always. A veteran of the Senate, now with the Bipartisan Policy Center, and giving us a real sense, Kaylee, of what we can look for with changes that are coming out of this bill. You wonder if Donald Trump told John Thune to keep it the way it is.
Yeah, well, certainly the Speaker of the House hasn't been shy about doing that, saying, Mr. Majority Leader, you need to change this as little as possible if you want me to be able to pass it a second time. We'll see how much louder the voice of the president gets on this.
Yeah, may not be very practical for John Thune in the meantime. Stay with us. We're going to assemble our political panel next. Maura Gillespie, Kristen Hahn, no strangers to this debate, will be up with us here on Balance of Power. Alongside Kaylee Lyons, I'm Joe Matthew. Thanks for being with us on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Familiar theme, another leg higher, and once again, best level of the day with the S&P now higher by 43 points at 59.79. A gain right now of 0.7%. Traders driving stocks higher as data shows the labor market is holding up despite concerns about the risks stemming from President Trump's tariff war. The Dow up 237 now, up 0.6%. Nasdaq up 216. That is a gain of 1.1%. We've got the 10-year at 4.46%, the 2-year 3.96%. Gold is down $29 the ounce, down 0.9%, 33.52 on gold, while West Texas Intermediate crude 63.65 a barrel, gold up 1.8%. Bitcoin up 1.2%, 106,160 now on Bitcoin. Victoria's Secret says a security incident that caused it to shut down its e-commerce site may hurt results for the current quarter. Victoria's Secret shares, they're down now by 0.4%. Treasury Secretary Scott Bessent says China needs to shift to a more consumption-led economy to help ease global imbalances and be a reliable partner for the rest of the world. Recapping, stocks higher. S&P best level right now, up 44 points. That is a gain of 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington once again. Your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. I'm Kaylee Lyons alongside Joe Matthew, live in Washington, where we are focused on the United States Senate, as we will be probably all week for the weeks to come, basically leading up until when they leave for the July 4th recess, which is actually the last week of June is the last week they're scheduled to be in session. And the Senate Majority Leader, John Thune, has suggested he would like to see a bill pass through the Senate, sent back to the House and passed through the House on the president's desk by the 4th of July. So the time is short. And there's a lot of people that still need to be made happy here, including Republican Senator Cynthia Lummis of Wyoming, who is not yet a yes, she says, on this bill. There's still some things she would like to see changed, including when it comes to Medicaid. She said this on Bloomberg TV and radio earlier.
I would like to see some reforms to Medicaid. This is not in an effort to remove benefits from those who were intended to have it, but rather to stop the states from using a mechanism to enrich their federal participation dollars, and 49 states are doing it. It would require the reform of the state's loophole for me to support the Medicaid reforms.
She's talking about changes to the provider tax, which, as we were just discussing with Bill Hoagland, is a problem for a lot of Republican senators who represent rural states. The fear that it could lead to the closures of rural hospitals or nursing homes. It's where we start our conversation with our political panel. Republican strategist Maura Gillespie is with us, the founder of Blue Stack Strategies. Kristen Hahn, Democratic strategist and partner at Rock Solutions. Great to see both of you here. Maura, what's your sense of this? If Republican senators start to tinker with this deal on Medicaid, you worked for a former Republican Speaker of the House. Is it DOA? When it comes back to the lower chamber, what happens?
No, the pressure does begin to mount, though, on making sure it can still get done. Again, I think that the biggest issue here is the role that the president will play in pressuring these members, especially in the House side, to accept what the Senate has done with the bill and get it done before, realistically, the August recess. I think that's the more likely scenario. But Senator John Thune is going to let this kind of work its will through the Senate, and you're seeing that play out. And talking about the benefits and some of the issues there with rural states, you know, Missouri is one that I know they have deep concerns about that provision that Senator Lummis talked about. So you're going to have a couple of these senators that are going to raise their, red flag as saying this is non-negotiable. They have a little bit more staying power as far as some of them aren't out for re-election this cycle, and they're not up in the midterms, whereas the House is going to have to play ball more so when it comes to Donald Trump's pressure.
So is that another way of saying, Maura, that the Senate actually does have a great deal more leverage here, might not be as easily moved by either the leader, John Thune, or by President Trump himself?
They do, just because of the fact that the House is up for re-election in 2026, and several of the senators that are speaking out, some are up for re-election in 26, but again, they represent a larger swath of the American public, and so their objectives here, they do have more legs to stand on as far as being able to push back on these provisions that the House pushed through.
What's your sense of this, Kristen Hahn, as a Democrat watching a Republican-only exercise? Do you expect that the House signs off on whatever comes back?
I mean, I think that if they want to ultimately get this done, they're going to have to. I worked in the House side when we had a Democratic Senate, a Democratic House, and President Obama in the White House. And it was a frustrating thing for the House staff and the members, because we would send something over to the Senate and that would come back to us, and we call it sticking the House. I mean, if the president wants to get it done, I think he's just going to have to force the members of the House to do it. And then a lot of them are going to be in some really tough spots if they get this done because of what we were discussing, heavy cuts to Medicaid and how that will impact a lot of rural America. And I know that there are a lot of members of the House who are very concerned about that coming back.
Well, when we consider those swing districts in 2026 and the messaging war that is going to be fought in them, Kristen, we were told last night by one Republican lawmaker that Democrats are just fear-mongering on this. President Trump is saying the same. How do you think voters will actually view this Medicaid issue? Is it just semantics to them?
I mean, you look at these town halls in a lot of these Republican or red districts, and people are fearful. They're scared. And that's not something that the National Democratic Party has ginned up. That's what's happening on the ground. People are they're upset, and they're voicing their opinions, and they're going to voice their opinions at the ballot box. So, I was actually, as a cons person, very impressed with, Republicans in the House who had been very concerned about this leading up to the vote for the bill. But once they voted for it, they were all speaking off of the same playbook, saying the Democrats are fear mongering, and this isn't actually, we're just, people who are not citizens of the United States shouldn't have Medicaid. I mean, they're doing a good job of talking about it up in D.C. and Washington on television, but at home, people are concerned, and that's what they should be concerned about in 2026 for sure.
What is it, Maura, that gets President Trump out of the White House back up on Capitol Hill? You know there's going to be a tough meeting at some point where everybody goes behind closed doors so they can be cajoled or even shamed by the president. We're starting with phone calls, but when does the personal visit happen? Does that push this across the line?
It will likely be when it goes back to the House. I think you're going to see some of these cuts, in terms of SNAP. Chuck Grassley has been pretty adamant about that one, that he doesn't like the House version of it. And so several members of the Senate don't like that either. And the discrepancy there between what the Senate wants versus what the House wants, it's pretty massive. So I think when we see how that plays out, and then again with the Medicaid discussion, the messaging there is important. And I think that Kristen hit on that a little bit there about what they're saying about fear mongering, but they're also talking about there needs to be a accountability when it comes to Medicaid, and the programs themselves are not sustainable if we don't get a handle on the fraud, waste, and abuse, both in Medicaid and Medicare. And so being able to talk to your constituents, going home and doing town halls, even though they're challenging and even though they're very difficult and you do get yelled at, it's important to hear your constituents, hear them out, and explain to them what it is.
5% on the 30-year.
We're definitely seeing that already in the data. You've seen momentum in signals on fixed income where short signals are actually sort of building and have been building for some time. So I think that steepener view, that sort of negative view on long-term bonds is something that's catching a lot of people's attention.
Hey, you know, I think I finally was brave enough to look at my 401k.
Why would you do such a thing?
Well, it's been over a month, 6 weeks, 8 weeks in the making. And it's like April and President Trump's so-called Liberation Day, Katie, never even happened, at least on the equity side of things. It did. But the U.S. bond market, I feel like, is still kind of wary.
Yes, that's a really good point. And I think what's been really hard for us on the systematic side is that, you know, you had this massive move and it's as if, you know, that didn't happen and the market is starting to turn a little bit more positive. But the one area that is seeing a little bit of concern is definitely bonds. So I think there is some truth to that despite the fact that equities may be back where they are, bonds aren't really quite where we'd like them to be for some investors.
So does that then, and look, I know you're focused on the fixed income side, but there is a relationship between the bond market and the equity market. Does that mean the bond market gets it and the equity market doesn't?
Well, I think the question, I mean, a lot of times people tend to look at the bond market during these environments to try and understand a longer term view. And that's because, you know, in general, the equity markets always like to be bullish. And so I think looking at the bond markets could give us an indication of potential interesting trends for the rest of the year and places where things may be a little different than they expect. I've even heard people talking about even higher rates on the long end, which would be a problem for many investors who are thinking about financing and et cetera later this year.
Well, it raises the question about the so-called bond vigilantes. You knew we were going to go there. Do they have the power that they've had in the past to essentially tell the U.S. government that, hey, this is not what we want to see right now?
I mean, I think it's really been a long time since we've really seen that force. But I think what we did see, even when April came about, and I think I keep going back to this example, is that when we actually had the equity markets falling, bonds weren't there for us in that environment. And I think that's an indication that either issues like inflation or other sort of, you know, the potential for fixed income to be more challenging is something that is really an issue for many investors, particularly in this environment, whether it's inflation that does this or whether it's, you know, bonds needing to be higher because real rates are higher. It's not clear yet, but it's definitely not the same bond market we're used to a few years ago.
I don't know, Katie, like, you know, how are you thinking about this world? Like, I keep thinking about it and I think about the U.S. being uninvestable. I think about the weaker dollar. Like, is the Mar-a-Lago Accord like happening before us? I just wonder, right? That's the administration's move to kind of correct some of the trade deficit by weakening the dollar. So is this kind of happening? I don't know. How do you guys talk about it with your team?
Well, this is a really good question because the biggest theme we've seen this year is a weaker dollar. Mm-hmm. I'm a little concerned about that trade for several reasons. If the market gets a little bit more positive, if growth becomes positive, that tends to be pro-dollar. But I think the thing that is the most interesting from a quant's perspective is we've actually really seen a deterioration between the correlation between bonds and the dollar. So higher yields usually means stronger dollar. Mm-hmm. And so you've actually seen the opposite of that. So that does indicate that something else is driving the dollar weakness, perhaps that U.S. vulnerability trade, this idea that people are repatriating capital and the U.S. assets are less desirable. The question is, how long does that go? And is that going to keep going?
How credible is that, Katie? Like, Tim's heard me say this a million times, so feel free to roll your eyes. But at Milken, it was just like, well, wait a minute. A lot of folks said it's all about rebalancing our portfolios. We all became too exposed to the United States. And so and that makes sense after, a long time when there was nothing else but really the United States, it felt like, certainly from an investment perspective. Is that true? Or I don't know, through your channels that you look, is it a case that folks are saying, I don't really want as much exposure to the U.S. It's not as attractive. I don't want to be there.
Well, I think there's some indications in the data. I mean, if you look at where markets have moved this year and the way that they behaved in the wake of the recent events, and just this decoupling between the dollar and yields, it suggests that other forces are affecting the dollar. So repatriation of capital and, kind of rebalancing does have an impact on those valuations. So I think there is some evidence to that theme. Just how strong is that theme? Is it as strong as some people would be concerned? We don't know yet, but it's definitely there.
TBD, like so much in our world. Hey, listen, this is a big week. We get the monthly jobs report, and we're cruising towards a Fed meeting shortly, soonish. But the labor market, we got, I feel like a sigh of relief a little bit today, based on the JOLTS data. But how are you thinking about, because I know, was it Torsten Slok that had out some research about 64,000?
Yeah, I got that note this morning, and I was like, wait a second. We're talking double digits here?
Help me. Microsoft cutting more jobs, Disney talking about jobs. At some point, this stuff has got to show up in the data. Factor that in for us.
Yeah, I think for us it's been really tricky because you've seen current data not really showing the expectations of concern that most investors have expressed in terms of their sentiment. So I think really it's too early, and for me I feel like most investors are out scouring for sort of any nowcasting or any sort of data that can give us a little bit of a sense of the longer term picture. But for now, actually, I've been very surprised. We haven't seen a lot of evidence of things deteriorating as much as we would have thought. So I think that's why the market is kind of calming down a little bit and has been very positive, moving towards more positive sentiment, because it just doesn't seem that the data has shown yet our concerns.
Real quick, 15 seconds. Fed, no moves this year? What are you thinking? Real quick.
We originally were thinking some, but I mean, for now, it's still looking very unclear. And especially if we could see some growth and maybe even some inflation, that's going to make things tricky. And employment data today didn't help with that narrative either.
Katie Kaminsky of Alpha Simplex. Love her. All right, coming up next, the CFO of Pagaya.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are off session highs, but still looking at gains for the Dow, the S&P, and NASDAQ. Traders are driving stocks higher after data this morning showed the American labor market is holding up despite concerns about President Trump's tariff war. Here's where we stand. S&P right now up 31. That is a gain of 0.5%. The Dow also up 0.5, higher by 222 points. The S&P, by the way, at 59.67. NASDAQ up 143 for the NASDAQ Composite Index, a gain of 0.7%. And the Bloomberg Mag 7 Index now up by 0.4%. The 10-year at 4.45% with the 2-year 3.95%. Gold down $30 the ounce, 33.51, drop there of 0.9%. And West Texas Intermediate crude oil up 1.4%, 63.43 a barrel on WTI. Kuwait Sovereign Wealth Fund is joining a Microsoft-backed initiative to bankroll $30 billion in AI infrastructure globally as the oil-rich Gulf nation looks to tap into the booming sector. Microsoft right now up by 0.2%. And President Trump will sign a directive formally raising steel and aluminum tariffs to 50% from 25%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellepant. This is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So you might recall, I think it was on Friday, we got some data on the U.S. consumer slowing spending in the month of April. Inflation-adjusted personal spending was up 0.1%, while goods imports plummeted by a record 20% due to higher tariffs. And what's really cool is we look for different metrics to get an idea of, Tim, what's going on with U.S. consumers.
So one thing we do is look at the metrics. The other thing we do is talk to executives who have an idea of what's happening with consumers. In our latest check of the CFO suite, we've got Evangelos Peros with us, CFO of the publicly held fintech company Pagaya. He's featured in the upcoming issue of the CFO Briefing newsletter. He joins us right here in New York City, along with Nina Tretman. She's senior editor at Bloomberg News and the author of the CFO Briefing newsletter. You can sign up for it at bloomberg.com/CFO Briefing. EP, I want to start with you. Just explain the business, and then we're going to get into the consumer and the view you have on it, because you've got a pretty good view of the consumer.
Yes, thanks for having me. Yeah, so if you think about Pagaya, think about it as an AI-enabled network that connects lending institutions on one side with institutional investors on the other side that want to deploy capital in consumer type of asset that we help originate. To give you a simple example, imagine a consumer walks in a U.S. bank branch who happens to be one of our partners. They apply for a loan, and before getting, let's say, a decline on that loan because their FICO score happens to be 700, well below, let's say, the 720 cutoff that U.S. Bank has, we can connect directly to them and offer a loan to that consumer, and therefore help U.S. Bank approve that consumer and help them with their consumer retention strategies and growth. And all of that is allowed through our AI model that we have in place and the technology that integrates with these types of institutions. Today, we're integrated with 31 different partners, ranging from big banks like U.S. Bank, Ally, SoFi, Klarna on the POS side, and connecting with over 135 institutional investors on the other side of the network. So the benefit of all of that is that we have a very good sense of what the consumer is doing, because we have the ability to integrate to all of these originating systems from all these different banks.
Yeah, and really, I bet banks love it, right? Because it, I think, would enable them to even do more loans. But I want to ask you real quickly, so what you see, what is going on in your platform, tells you what about the U.S. consumer or about consumers? How are they doing?
Yeah, so I would say what we see is the consumer trying to potentially cut a little bit on their spending as it currently stands, but not necessarily impacting at all their ability to actually pay off the existing loans that they have in place. The market is open still for these types of lending. And again, we get the benefit of 31 different partners. We look at more than $250 billion of applications that come through our funnel every quarter. So we have a very good sense of how the consumer is trending and the consumer spend overall.
EP, jumping in here, Nina, thanks for joining. I'm just wondering, in terms of the outlook for the year, we've heard about declines in consumer spending and specifically in consumer confidence. So I'm wondering, for your business, are you planning for a recession? And if so, how does that influence how you're working with your partners?
Yep. So I would say right now we're not planning for a recession, but we have all the systems and technology in place to be able to be nimble and flexible and react as needed. So currently we're obviously staying very close to the data. April data is still coming in strong, as I said before, in terms of the consumer's ability to continue pay off their loans. Some of the demand for these types of new loans may have come down, but we don't necessarily see right now anything pointing to the data leading to a potential recession down the line. Again, that doesn't mean we're out of the woods. It's something that we're monitoring very closely, but we don't see any of the data telling us anything of the sort.
And just wondering, in terms of the potential declines in demand that you pointed out, like, are there specific types of loans where people are pulling back, or is it sort of in certain geographies or across the board?
Yeah, so we're actually, today Pagaya is integrated in 31 partners, and we're mostly focused on unsecured personal loans, auto loans, and point-of-sale loans. We see a little bit less of the demand for the unsecured loans. But other than that, if you think about the other verticals, we haven't seen anything. If anything, on the POS, it continues to be a very exciting area in consumer credit, and we still see a lot of demand in that space too.
Gotta say, a lot of interest in your inaugural securitization of point-of-sale loans, and I want to talk with you. We want to talk with you about it. Bond issuance, the first of bond backed by loans made to online shoppers. So it definitely caught our attention. And I hear securitization, and I always get a little bit worried. So tell us about that, what we need to know, and what this actually means, what it enables you to do.
Yeah, so we're very excited about that product. We're obviously one of the largest ABS issuers in the marketplace, number one on the personal loan side, and we obviously have aspirations to continue to grow that product. On the POS in particular, it was our inaugural POS asset-backed securitization of $300 million. But because these types of loans are actually short-term in nature, it has a revolving type of structure that allow us to basically fund more than $1 billion of these types of loans over the course of the next, call it 12 to 18 months. And this is a very powerful tool, given our scale and breadth in our capital markets expertise and presence, that some of our partners like Klarna can really partner with us and really help them grow their network of merchants, and obviously increase the merchant satisfaction rate that they have. The way to think about it is think about investors coming in wanting access to these types of loans. And ultimately what we do is we partner with companies like Klarna, help them originate these types of loans. We place them in this securitization, and ultimately the investors get the benefit of the risk-reward profile of these types of assets.
Wait, so I'm confused, because my understanding was that you guys don't actually hold the loans, but are you quickly passing them along?
So effectively what we do is we connect directly the lending partners' systems, let's say in this case of Klarna, and basically originating, our technology allows the underwriting of these types of loans and placing them directly to these asset-backed securitizations that we act as a sponsor of.
And just to follow up, in terms of the transaction that you placed, this of course happened right when markets were pretty volatile. I'm wondering sort of like how has the investor demand evolved, and how are you navigating this, that we're in a pretty volatile period where the market is just not open at all days?
Yeah, no, I think so. It's a good question. Obviously, in April, we did some volatility and a little bit of market dislocation, specifically on the capital market, some of the spreads widening. But ultimately, our scale and presence and the fact that we work with, over 135 institutional investors allows us to be in position to adjust accordingly. We don't see the demand continues to be very strong. These types of dislocation happen all the time. There's always going to be a reason why capital markets move left or right, up and down. But once you have the certain scale that we have and the relationships that we have in the presence, that allows companies like ours to really continue to perform through the cycle, through changes like that. In April, as an example, even the first week of April, which we saw most of the volatility in the marketplace, we managed to issue $500 million of personal loan ABS, followed by another $300 million on the auto side, and all of them being well oversubscribed.
EP, we're talking a lot to every executive we speak to. We're really asking them to give us details about AI and how they're using AI in their businesses. And I'm wondering not just how you're using AI right now, but how that's changed from a short time ago, let's say 6 months, a year ago. Because what we're told by folks in the industry is that this stuff is moving with incredible speed. I'm talking like years within 3-month increments, one person told me.
That's absolutely true. And obviously, we're at the forefront of this type of technology. We have been in this space for over, call it 7 years. We are razor focused on the types of loans like personal loans, auto and POS, and therefore the expertise continues to grow. What I would say is AI is a little bit of a buzzword, obviously, nowadays. A lot of people are using it. The key differentiator when using AI models to really make more informed decisions is all fed by the data that the AI model absorbs. And in our case, the ability to be integrated with so many different partners across multiple different asset classes and different types of partners, from banks to fintechs to neobanks, this is what really differentiates the underwriting in our case. And ultimately, any AI model, somebody can always hire somebody to write an AI model, an AI code on how to underwrite these models, but ultimately the data by which you feed it is really what sets it apart. And I think in our case, we have managed to build that database and really distinguish ourselves relative to some of the other players in the marketplace.
And just to confirm, so the AI actually helps you with like detecting or assessing credit quality of borrowers, or is it more indirect?
So, no, it is direct. And the way I would think about it is, think about traditional manual processes of underwriting loans that would focus on one single type of metric, like, let's say, FICO, and looking at income statements for the last 3 years and things like that. I think what you manage to do is now you have a lot of the data that come with any application process from any consumer through the lending partners, combine that with a lot of the bureau data, and then you can find a lot of different correlations between the different data and make more informed decisions. What I would say the other piece of differentiation is when you think about these types of assets, like consumer assets, right, where are smaller ticket items, the ability to make a very quick decision and provide continuous flow of these types of assets to institutional investors, it can only be achieved through a technology. It's very difficult to do this through a manual process, looking at tapes and different data all the time and try to underwrite on a continuous basis. So that's where the technology and the AI becomes a much more efficient process on how to underwrite these things and these types of assets and really place them in the hands of institutional investors.
EP, how do you know that you aren't getting into trouble? Like, I understand that you guys are looking for this second look series of loans for individuals, but how do you make sure that you're not increasing risk for the bank? How do you ensure that AI is going to catch it and do it correctly? And just got about 30, 40 seconds. Yeah.
Yeah, sure. So I would say what the AI allows you to do is through the data, as I said before, to make more informed decisions. Specifically on Pagaya, and when you look at us relative to some of the other players in the marketplace, look at the leadership team, we have a significant risk overlay on top of that. And the monitoring and process that we go through to really assess all the different trends has to go through extra layers of sort of risk management that you generally don't see to the same level and extent as you do in Pagaya in other places that are much more focused on the technology. So we have managed to mix that risk monitoring and really focus on these types of loans. And the level of expertise that we have is just, I think, something that you can't really find elsewhere.
Well, super interesting, and love to have you come back and continue to talk about this. Evangelos Peros, he's Chief Financial Officer of Pagaya EP, joining us here, along with our own Nina Trentman, Senior Editor at Bloomberg News, the author of the CFO Briefing newsletter. A new one comes out every Sunday.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, and NASDAQ are all advancing. Traders driving stocks higher after data this morning showed the labor market is holding up despite concerns about President Trump's tariff war. Here's where we stand. The S&P up 36 now, up 0.6%. The Dow also up by 0.6%, higher by 237 points. The NASDAQ Composite Index up 0.9, up 166 points. The Bloomberg Mag 7 Index up 0.5% with the 10-year right now at 4.45%, the 2-year 3.95%. Gold down $29 the ounce, down 0.9%, 33.5240 on gold, and West Texas Intermediate crude up 1.4%, 63.41 a barrel on WTI. Bitcoin now up by 1.1%, just above $106,000. Constellation Energy has agreed to sell power from an Illinois nuclear plant to Meta Platforms as artificial intelligence sends power demand soaring. Meta down 0.4%, Constellation up 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, folks, you're up to speed on the markets. Let's get into what's really one of our big stories today. We wanted to dig into it even more. We're talking about the parent company of Facebook, Instagram, and WhatsApp signing that 20-year contract to buy over 1,100 megawatts from Constellation Energy's Clinton plant starting in mid-2027 when a state subsidy expires. Keep in mind, Constellation, the biggest U.S. nuclear operator, and also Meta, they didn't provide any of the financial details, but this is one of the big AI plays.
Yeah, the big question is what it tells us about AI usage, the hyperscalers and Meta specifically. Also more. Back with us is Ed Ludlow. He's the co-host of Bloomberg Technology on Bloomberg TV. He's been talking about the story all day. He's also been doing a little bit of math. I was told there wouldn't be math, but he's sending emails with all this math. And that's exactly where I want to start, Ed, because the first thing I thought of when I saw this news early this morning was Microsoft. And the news that we got from Microsoft, I believe it was back in September, about its purchase of energy from Constellation. So let's compare apples to apples here. What does it tell you about Microsoft and its energy purchase, and Meta's as well?
It tells me that Meta's purchase of nuclear energy, or should I say sourcing of nuclear energy over a 20-year period, is a bigger deal by units of energy measure, and probably a bigger deal by dollar than Microsoft's 20-year deal with Constellation. And it's as simple as that. And like, I'm sorry, guys, like sometimes I do that, right? You have to email 400 people and be like, I did the math on this. But for me, like, this was a really big and is a really big story because Meta is not at the same scale as Microsoft when you simply measure the number and size of data centers it operates compared to what Microsoft does. So the fact it's really gone all in on one single deal to source nuclear energy is very telling of its commitment to power, pardon the pun, literally, AI development.
But Ed, maybe Microsoft would say, hey, we're not putting all our eggs in one basket with this purchase from Constellation. I'm just playing devil's advocate here. We're going to diversify more. Maybe we'll end up using more power over the next 20 years, but we're not going to source as much from Constellation.
Absolutely. So, like, Meta operates data centers. It is not a cloud computing provider, but it operates data centers enough that we care about that. The cloud computing providers, AWS, Amazon's AWS, Microsoft, Google, have much more scale. And so this is how I think about it. This was one single big deal for Meta. Each year, or currently, Meta is contracted to buy about 15 gigawatts of renewable or carbon neutral energy. Microsoft, by comparison, contracted long-term, all its deals is more than double that. The amount of energy that it is contracted to buy from renewable or net carbon neutral sources. So you're absolutely right. Microsoft has more options. It has much bigger commitments, and those are global commitments as well.
What does it tell you about the AI demand as everybody kind of seems to scramble? Like, I am just curious about that. Would they do this? Like, I don't know. You sign this 20-year deal, but could you say after year two, I got to back off. I don't need as much. Help me out here.
the duration of the deal is really interesting. 20 years and 20 years, and you're thinking like, why would anyone commit to something for 20 years? Like, I don't even know what I'm going to have for dinner tonight, let alone what's going to happen next year, or that as an example. But here's the thing, you look at it two ways. The market takes from it confidence that Meta is committed. We know about their capital expenditures numbers. I remember being on the show with you guys when they came out and talking about how they were higher than expected, and we looked at the reasons why. Supply chain costs for data center are higher. Same with energy. Energy prices fluctuate, and Meta, to your earlier question, is sourcing from multiple places. By committing for 20 years, you're basically saying, I'm guaranteeing these data centers a supply of energy at what we assume is a certain price, because you asked another very good question. You always do. We don't have any financial terms. The only thing we need to know to make this apples to apples is what is the dollar per kilowatt or dollar per megawatt hour that Meta is getting this nuclear energy for, relative to what it's getting for solar energy or wind energy, or just from the grid in general, from fossil-based fuel sources. And that's why the math's super fun and important as well.
Hey, Ed, one thing that continues to boggle my mind when it comes to the way we're talking about energy demand over the future is to what extent efficiencies are actually priced in to demand here. Isn't this stuff supposed to get more efficient as it gets better, as the underlying components get better, as the software gets better, as engineers figure out ways to run this stuff faster and using less energy? Like, how are we still